All right, what's good, boys? Welcome back to another video. Today is gap model part 2. So just like the PDI strategy, we're going to just do a brief overview of what we learned in part 1, and then we'll jump into my live examples of trades I actually took and go over those together, all right? So again, what are we looking for with our gap model? Well, we're looking for a significant liquidity pool or a key level to get hit, right? That's the first thing we're doing with anything, right? And then did we leave a unfilled fair value gap above or below us, right? The fair value gap must be unfilled for this to be valid. Why? Because we're specifically targeting the unfilled fair value gap as a take profit. Okay, so it must be unfilled. How is price reacting off this key level, right? Are we getting an instant reaction? Or did price hit the key level and start to chop around a little bit? That's something we want to look out for. And then do we have a valid low time frame IFEG to enter off of, right? Same thing with our continuation model and our PDI model. Highest time frame inversion off the most recent leg, right? Well, what do we know? After price hit the key level with unfilled gaps above or below it, we're most likely going to retrace to balance price out and into either equilibrium or a fair value gap, right? External to internal liquidity. In this case, we're only going to be targeting unfilled fair value gaps. However, if you want, you can leave runners to equilibrium if you want, but I don't recommend that. If we are using an inversion entry model, we have to wait till the highest time frame fair value gap gets inverse, right? So again, if we have 1 4 minute and 2 2 minutes, we're going to wait for the 4 minute. If we have 2 1 minutes and 1 2 minute, we're going to wait for the 2 minute. Okay, pretty easy to understand, right? And then some extra notes I would like you guys to either write down or just remember if you guys already have them written down, right? We're looking for a sweep or a tap into a key level, right? Doesn't matter if it's a liquidity sweep or a tap into let's say an unfilled 4-hour fair value gap into a key level, then a retracement into an unfilled fair value gap. Doesn't require bias, just requires a high time frame narrative, right? So if we're in a bearish market, we can take a long towards that unfilled gap and so on and so forth, right? If we're in a bullish market, we can take a short towards that unfilled gap. So no bias needed, but we do need a high time frame narrative such as a sweep or tap into a key level first, right? And then we are aiming for a 1-to-1 to 1-to-2 RR, right? Low RR, high win rate. If our high time frame bias aligns, we can leave runners to external draws. If not, we take profit at that unfilled gap we are targeting. Price hit the key level and we see an instant reaction within IFEG, we don't have to wait for a resweep, right? If price starts to chop after hitting the key level, we need to wait for a resweep. And there's examples below us that we'll go over briefly. Again, just keep that in mind. And then break-even points at internal highs or lows. Again, we'll go over those examples right now. So just like we learned about in part 1, we're going to go over this just real quick, right? So if our bias aligns, okay, if we're in a clear downtrend and we hit the key level, but we don't have any unfilled fair value gaps up here, but as we retrace into, let's say we have a liquidity sweep, let's say this is like a 5-minute liquidity sweep, right? But if we tap into a 15-minute fair value gap again and get a SMT, and then we invert something coming out of that 15-minute fair value gap, when we retrace, we left this unfilled fair value gap. So what can we do? Oh shit. We can enter off the inversion, right? Stops at the SMT highs. And what did we do? We built a conviction. Why? Because we have an SMT, we have a middle time frame gap that got tapped into. We're already in a bearish structure, and we just inversed a lower time frame bullish fair value gap, right? And again, we're in a bearish structure, so that's perfect for us. Stops at the SMT highs. Where's our first take profit? First take profit is going to be this unfilled gap. And like I said, since our bias aligns, we can then hold the runners to this low that's inside the key level, high time frame key level 2 and high time key level 3, okay? And then if bias doesn't align, right, we're in a downtrend, but we're taking a long. Say we tap into a key level, we also build more conviction by getting an SMT, and then we get let's say a 1-minute inversion with speed. Then we can go ahead and just target this unfilled 15-minute gap because we're clearly in a downtrend. So we're most likely going to tap into this 15-minute gap and either continue lower, right? So we don't want to run or hold runners all the way up towards here because it would be going against the high time frame bias. And then just like I just mentioned, how is price reacting off of the key level, right? We hit a key level. Do we get an instant reaction or do we start to chop around, right? So give me 1 second. So if price hits a key level and we get an instant reaction, right, inversing this whatever fair value gap it is, whether it's a 1 to 5 minute with speed, then we can go ahead and enter. But if we hit the high time frame key level and we start to chop around and it takes about anywhere more than like, let's say it's a 3-minute for value gap. If it takes 9 minutes to invert that gap, I'm most likely not going to want to enter off that inversion, and I'm going to want to wait for a resweep. Or let's say NASDAQ doesn't resweep, but ES does, and we get an SMT, then cool. We just built conviction, right? But we want to build more conviction, especially if price starts to chop around after hitting this key level. So say we come down and we have a 2-minute right here, but we're starting to chop around, and then we end up inversing the 2-minute, but after like 6 candles, then we're probably going to want to wait for a resweep. Why? Because price is most likely going to want to resweep that area. And if we get an SMT, then great. If not, then whatever, right? Let's wait for the resweep. And then we can enter off this leg's inversion right here. Now, say price doesn't want to resweep and we end up inversing that and it runs to our take profit. Well, then so be it. It wasn't a good trade anyway. Why? Because we want clean inversions. And then what is the rules to the gap model? Well, TP or break even at a 1-to-1, right? Low RR, high run rate. Break even at internal highs or lows. So say right here, we end up getting a SMT, and then we invert this gap. Well, where's our internal low? Our internal low is going to be right here, so that is going to be our break-even point. Oh my god, I keep pressing long for some reason. Why does it do this? All right, target right here, and then this would be our break-even point, or if we have multiple contracts in, we can take one off right here and then leave runners down to this unfilled gap right here. Okay, no equal highs or lows at or near our stop loss. This goes for any model, whether it's a continuation, PDI, or this gap model, due to the reason that equal highs or lows are a high draw on liquidity. So we're most likely going to want to sweep those out before continuing in the direction we want price to go. And then if it's not a clean inversion, we're going to wait for a resweep. And that's exactly what I just mentioned right here. So with that being said, let's jump into the examples I took live. All right, so we're just going to go over the last 5 trades I took using this gap model. 4 wins, 1 loss. Okay, so for the first one, it's actually going to be a loss. This happened on Thursday. So what did price do at market open? Well, we ended up shitting the bed, right? Data news candle. So what do we have? We have data lows, data highs. Okay, we end up coming up higher and higher and higher. What is this blue line? We tap into a 30-minute fair value gap and a 15-minute fair value gap. Okay, what do we get from there? As we're trending higher, what do we leave? Well, we leave this unfilled gap down here. We leave this unfilled gap right here on the 5-minute, and then what do we have on the 15? Well, this unfilled 15-minute gap, and then this unfilled 15-minute gap as well. So we have clear targets below us, so all we're looking for is what? Is a high time frame narrative, right? So what is our high time frame narrative in this situation? Well, this is a unfilled 30-minute gap. Here's what it looks like on 30-minute, right, for value gap right here. And then it's also the entry point to an unfilled 15-minute gap as well. So what do we end up doing? Well, we push into that, and then what do we have with our data news? Well, we have an SMT with ES, right? ES has yet to take out that data news candle, so now not only do we have a 30-minute, a 15-minute, and a data SMT, well, what else do we get? And this setup was a L, actually, due to the fact that, I guess you can say I rushed it, right? Because what are we supposed to enter off of? Anything from the 1 through 5-minute inversion for value gaps, but there was no 1 through 5-minute. There was only a 30-second. So I entered off the 30-second, stops at the SMT highs, and what does price end up doing? Well, kind of chops around and then stops. So what could I have done better in this first trade, right? Well, I could have waited for a high time frame narrative because all I had was a 30-minute and a 15-minute, right? And the 30-minute was my highest time frame narrative. But what does our high time frame narratives consist of? Well, hourlies and above, right? And we didn't have the hourly tap into this for value gap yet. So that is one thing I could have fixed. And I also could have fixed the 1 through 5-minute inversion, right? We didn't have it, and I rushed it off this 30-second when there was clearly a 1-minute right here. So I either could have waited for this 1 minute to get filled, or I could have just sat on my hands and waited for a cleaner price action, right? So that's what ended up happening there. But what do we end up getting right after? Well, we get a push higher into what? Into this hourly for value gap. Cool. What ended up happening on ES? ES actually wanted to take out these data highs. So now we have no more SMT. So that is the reason price ended up pushing higher. So this SMT is no longer valid. We still have this 15-minute and 30-minute bearish for value gap we push into, and we still have clear targets low. So this trade idea still isn't out of the works yet. What do we end up getting? Well, after we push into the hourly, we ended up getting, hold on, I gotta scratch my eyes. We ended up getting this 3-minute inversion of this fair value gap. And I got a little bit of a late entry on here because I was more worried about my XFAs on top step. Actually, pretty fucking late entry. But we got the 3-minute inversion. I entered pretty late. If I entered strictly off the inversion itself, it would have looked something like this. I did on my top step accounts, just clearly not here, right? So it would have looked like this. Stops at the swing highs and take profit all the way down to the 15-minute. So still this general trade idea I took, this would have been a 1.39, and the one I took was a 1.27. So a little bit worse RR, and I didn't have my stops at the swing highs, which typically they are. But like I said, got a pretty shitty entry. What is this first dotted line? It's going to be this unfilled 5-minute. So that is going to be either TP1 if you guys have multiple contracts and break even, or if you guys don't have multiple contracts and you guys are very confident it's going to go to this 15-minute, which I was here because I only went in for 1 mini. Well, it hits that breaking even point. I'm now break even. Since I only go in for 1 mini, I was holding full profits, and it ended up smacking my TP. And then what did it do later on, right? What else do we have down here? Well, we had this 15-minute as well. And if you have fucking balls of steel, you could have held it, and it ripped right fucking to it, right? So there is a loss example, and I explained to you what I could have done better, and there is a win. So let's go and jump into example number 3. Okay, moving on to example 3. This is the day prior. This is August 13th. What do we do at market open? Well, market opens and we instantly shit the bed. I found no entries in here. I was wanting to target this blue line, which is a unfilled 4-hour fair value gap. However, we got no retracements into a 5 or 15-minute gap. So, and we ended up leaving a plethora of them, right? On the 15-minute, we have one right here. We have another one right here. We have one right here. Okay, and then what do we have on the 5-minute? Well, we have a shit ton over here, obviously. And then we have 1 and 2 right here. So after we come down and take out these 4-hour lows, right? We also take out these 1-hour lows. We also tap into this 4-hour fair value gap. So now we have more than enough high time frame narrative that, okay, we're probably going to retrace just a little bit. And then what else do we have on the lower time frames? Well, here's London lows and here's Asian lows, right? We clearly swept those out on NASDAQ, but ES was nowhere near them. So not only do we have our high time frame narratives with the hourly and 4-hour charts, well, we also have our session narrative as well, or adding to our session SMTs, adding to our narrative, we should say, because NASDAQ came down and swept out London and Asian, and ES did not, which means we have a double SMT with the session, right? So what do we have above us? Well, we have a 5-minute right here and another 5-minute right here. What do we get? We get a tap into the 4-hour, and we get an immediate reaction out of the tap. Okay, this candle did not inverse this gap, so I'm waiting for this candle to close. Once this candle closed, which it did, I entered off the closure. This right here, right, my entry point and this entry point would be the exact same thing. Okay, where's my take profit? My take profit is to this unfilled 5-minute because it's a 1.196, and I was pretty confident we were going to go that high just because we were severely oversold. Right, no, and we got no retracements on top of all this bullish bias or bullish conviction, helping us take this long, I guess you can say. Sorry, I just blanked out for a second. So we had 2 5-minutes. Again, I went break even at this first 5-minute. I only went in for 1 mini. Dash line right there. If you want, you could have took one partial out right here if you guys are going in for multiple contracts. Especially if you're new, you're probably only using micros. So if you go in for anywhere from like 5 to 8 micros, I would have took at least like 3 out right here. Let the other 5 run. And yeah, as you guys can see, smack take profit, right? This is our retracement model. Stops at the swing lows, which is actually SMT lows because, you know, right? And we also have all this LRL right here as well. So 1-minute inversion, got an instant tap, right? It's not like we got to tap into here and then started chopping around a little bit. No, we got a instant reaction out of it, inversing this 1-minute gap, and we had clear targets. Okay, so right? Jumping on over to example 4, this example might be my favorite one because it's a little bit different than all the other ones. Okay, so what do we have? This was Friday, August 8th. So 9:30 opens, market opens. What do? We just rip higher, right? We're clearly in a bullish structure. What are we doing? We're disrespecting bearish PD rays while we are respecting bullish PD rays, right? On the way up, what do we leave? Well, we leave an unfilled 15-minute right here, and we also leave an unfilled 15-minute right here, okay? But when we trend up, what do? We sweep past previous day highs. Where is ES? ES is nowhere near previous day highs, right? So that is our high time frame narrative. We have a previous day high SMT. What else do we get? Like I said, this example was a little bit different than all the other ones. Well, we get a 10 a.m., right? Here's 10 a.m., right? We still have these gaps below us. This is one 15-minute gap. This is the other one. What do we get? 10 a.m. opens. We instantly go higher, right? So we get an open high. Now we're looking for a low close. When we opened high, we ended up sweeping past that previous day high, creating an SMT. So not only do we have a PDH SMT, well, we also have a 10 a.m. open high. What do we get on the way up? Well, we get a fair value gap right here, bullish fair value gap. What do we get? We get an instant reaction off of the previous day high SMT. Okay, I'm going to go ahead and enter stops at the SMT highs. I went in actually for this one with 2 minis because I was so confident in the draw, just because how overbought we are. So this first 15-minute was my break-even point and TP1, and then the second one was a full TP. So what ends up happening? Well, we come down, smack TP1. My stops are now at break even. I'm now only in for 1 mini. And what do we end up doing? Well, we end up reversing back towards my break even point. So that is a prime example as to why we go break even at the first unfilled gaps, especially if we want to hold runners, because price can literally do this. And again, if you only went in for 1 mini, then either you could have took full profits right here, or if you wanted to see it go down here, then you would have moved to break even, and this would have been a break even trade. But if you went in for more than one contract, then you would have won because you would have took at least partials right here. Okay, so one more time, what do we have? We have a PDH SMT, which is going to be our high time frame narrative. All right, we swept out previous day highs, which is a key level, and we also created an SMT with it. We also got a 10 a.m. open high, right? 10 a.m. opens right here. What do we get? We opened high, and then we got an instant inversion out of it, out of the high time frame narrative. Enter, break even point at fair value gap 1, full take profit at fair value gap 2. However, we didn't end up going back, and we did later on in the day, I think. Oh, no, we didn't. Yeah, we just ended up chopping around. So W break even, that was also a win. And then let's move on to example 5, which is going to be our last example. All right, so moving on to our last example, what do we get here? Well, market opens, instantly shit the bed, right? What are we doing? We're kind of just chopping around. But what is going to be our high time frame narrative? When we shit the bed, we left this 1 hour for value gap between 8 a.m. and 10 a.m. So now we have this hourly gap. What else do we get? We get 15-minute highs that get swept out. And what else do we tap into? We tapped into this 5-minute discounted gap. And when we tapped into that discounted gap and also this hourly for value gap, what happens? Well, we didn't really get a reaction out of it, right? We tapped into this hourly gap. Okay, we kind of chopped around a little bit. What else is going on? Really nothing, right? And again, what are our targets below us? Well, when we retraced up into this hourly gap, we left this 15-minute and this 15-minute as well. So what's going on? We're still chopping. I want to see a clear leg that has a fair value gap that we can inverse, right? And none of this offers that right now, okay? We don't want to be trading chop. Boom. What do we get? We get a clear leg that sweeps past 1207 highs, doing what? Creating an SMT, and this is exactly what we talked about in the beginning of this video and in part 1, right? We get a resweep, NASDAQ sweeps it out, ES does not. We get an SMT, and now what? Instead of looking for a bullshit for value gap to inverse in this chop, what do we get? Well, we get a clear for value gap right here to inverse. So once we got that SMT with an inversion, I'm shorting that 10 times out of 10. I'm putting my stops at the SMT highs. And what are our targets below us? We have this 15-minute, and we have this 15-minute. And what am I doing 10 times out of 10? Well, I'm entering. What is this first 15-minute going to be? Again, multiple contracts. That's going to be break-even point and TP1. If you're very confident it's going to go down to this 15-minute, which I was, because we had literally all these lows right here, these relatively equal lows, and a plethora of unfilled gaps again. So I moved stops to break even here. I think I only went in for 5 micros on my XFAs, which typically I go in for 1 mini. But I went in for 5 micros, so stops were at break even here. What ends up happening, I'm still at break even. Do not get tapped out, right? Because price does not hit my break even point. And what ends up happening, boom, take profit gets smacked, and we're done on the day. It's that simple. Again, let's go over it one more time. What was our high time frame narrative? It was this hourly fair value gap. Then what do we get from there? We get a 15-minute sweep of this liquidity of these internal highs. We also tap into this 5-minute discount. Well, when we tapped into this hourly gap and this 5-minute discount, we didn't really do anything. So what did we wait for? We waited for a resweep. When we got a resweep, we actually ended up getting an internal SMT along with a clear fair value gap to get inverse. As soon as we created the SMT, we got an inversion, enter off the inversion, stops at the SMT highs. Take profit at fair value gap 2, or you could have had take profit at fair value gap 1 if you have multiple contracts, or you just wanted to go and be done for the day, right? Sorry, I don't know why I just blanked out right there. But this would have been a 0.91. Like I said, we'd like to aim for a 1-to-1. So if you guys wanted a 1-to-1, you guys could have put it just below it, and it still would have got smacked anyway. However, I held mine all the way down to fair value gap 2. Almost got stopped out at break even, but luckily we did not. So that's really all for the gap model, right? All we're looking for is a high time frame narrative and then looking for the retracement leg. But when we get the retracement leg that we're looking to enter off of, right? So technically this leg would be the retracement leg right here. Why? Because where did we go into? Well, we retraced right into this 15-minute fair value gap, and then we're most likely going to want to continue we're most likely going to want to continue higher. Okay, so when we're looking to enter off that retracement leg, we have to build conviction. And how do we build conviction right here? Well, we had a high time frame narrative along with a couple middle time frame, let's say confluences as well, because I wouldn't like to use that as my condition, right? We had a 15-minute sweep and then a 5-minute discount, and then we got a resweep after the chop. So, right, we got a little accumulation, and then we manipulated higher, taking out these 1207 highs, creating an internal SMT, and then in an instant reaction, getting an inversion with clear targets below. So that's all we're looking for, right? High time frame narrative, build conviction. Is there unfilled fair value gaps above or below us that we can target? All right. And if there is, then boom, we're entering 10 out of 10 times. Like I said, this is the strategy that made me profitable, and I use this literally on an everyday basis. Okay. If you guys have any questions, comments, concerns, leave them in the comments. Subscribe if you want. It is what it is. LoeGpa is all my social medias. Feel free to DM me on there. Free Discord in the description. Okay. I live trade every day on there, along with my trade recaps get posted. Literally everything gets posted in my Discord. So go check that out. Appreciate y'all boys for watching. If I could have done anything better, if you guys didn't like me saying certain things, or I could have described shit better, please let me know down in the comments, and maybe I can reword my words for next time. So catch y'all boys tomorrow with another beginner's blueprint video.